Pinterest, why did it just go down 20%? I have no idea. Are you asking those questions to yourself? Well, here I'm going to try and explain what exactly happened in the Q2 2021 earnings report by Pinterest. This last week, Pinterest by the end of July 30th, 2021, just got dumped on. It was like the stock market said, Hulk smash Pinterest. What did Pinterest do? Or is this the stock market just going crazy? Well, I'm going to explain it to you. Basically, when we look at Pinterest, just for a little background, we see that Pinterest has kind of been going up and down for the last few months since what? I don't know. I'm looking back here around December 14th. So this is around like beginning of December. It's been going up and down. It's in range bound, and it's just really got dumped here. Maybe no different from here or kind of here, but it's definitive now. And I'll explain. This back and forth has been a debate in the market, as well as momentum trading, some little swing trades back and forth on, is Pinterest a pandemic stock? And the answer is definitely yes. And how we know that? Well, let's take a look. Pinterest has, well, not this one, but on the quarterly report, the letter to stockholders, they wrote Q2 revenue grew by 125% year over year to 613 million. Great. However, global monthly active users grew 9% year over year to 454 million. Why is that bad? Well, just like a lot of things with the stock market, they kind of expected that, but not as bad as 9%. They expected higher. And to give you perspective, maybe a more clearer perspective on this, when we go down to the monthly active users, that year-on-year 9% for 454 million by end of the quarter is actually down on the previous quarter from 478 million. So that's one reason. But also to maintain the growth to be higher than 478 million on the quarter-on-quarter basis, the year-on-year percentage growth still has to be around 25 or more percent. And we see that by looking at the fourth quarter of 2020 investor presentation deck, where we see previous to the pandemic, where their figures started to get affected the pandemic in Q2 2020, previous to this quarter, we saw an average around 26% year-on-year growth. So a average of 9% year-on-year growth isn't going to cut it. It needs at least like 25%, 26%. That's what costs the stock 20% this week, and it's probably going to be permanently down until they've fixed this issue and they're no longer considered a pandemic stock. Long term, is it going to continue growing? Well, if it doesn't innovate and you consider the growth that it's had so far as pulling forward the customers, pulling forward the adoption on the curve of increasing users, then it could be problematic. It could be now becoming a mature product within the limited amount of users that it has relative to some larger platforms. And to give you perspective, Facebook at 2.7 billion and YouTube at 2.3 billion as of January 2021, courtesy of Statista.com, we see that they're massively larger than little Pinterest at around 442 million, or whatever the figure is now, 454 million currently. That it's already peaking at this figure. That's not good. So there's some issues that Pinterest has to figure out. Listening to the earnings call, the CEO had gone over what he thinks the future of Pinterest is, and that can bring some solace to investors who are thinking of selling. And he states it kind of here as well in the summary in the letter to stockholders. Our second quarter results reflect both the strength of our business and the recent shift in consumer behavior we've seen as people spend less time at home, Ben Silbermann, the CEO and co-founder of Pinterest, said. But while we navigate through the pandemic impacts, Pinterest is focused on building for the long term by transforming from a place to browse, save, and organize to a community of inspiring people sharing their passions and expertise. That's basically other lingo for we're going to try and be a social platform. What are they doing to do that? And he talks about it on the investor call, and they're introducing what is called idea pins. Now, in the past, they called it story pins, but regardless of what you call it, story, idea pins, that's just a branding, naming thing. It was initially launched on September 23rd of last year. They started to really see that the growth in social over the last few years for them has kind of, for others, has really passed them by, and they haven't had that kind of growth. For instance, Snapchat this week was 3 times the value of Pinterest. Its capitalization is over 100 billion, as compared to Pinterest with just just a little bit over $30 billion dollars. So, if you look at social aspects to Snapchat, Facebook Messenger, Instagram, and other like TikTok and other platforms, you start to realize that people are really interested in socializing and being creators as well as consuming creator content. While at Pinterest, it's more kind of like, hey, I want to inspire myself, but not through other creators, but just kind of like things that are online, like products, be it or home furniture design ideas and home interior design ideas to like what things I could buy to actually put in my home or renovate my home to make my home look like that. So it's not so much creator content driven as it is really more driven by your interest in developing your own home and building out a nice nest there or something other that's not content, not creator driven. So they want to kind of shift over to that creator driven because they know that this moment in time that the pandemic has existed and it still exists around the world in most places, as well as some parts of the United States, right, is going to pass by. Eventually we're going to get by and through this pandemic, but they're going to be left with kind of, yes, some users that might stick around, but what the trend is, and as it's been proven, user growth slowing and going in reverse. So they're trying to shift their product. That's difficult to do. But if you see what they're trying to do and how they're trying to do it is by creating videos that people post or allowing content creators to create videos through an embedded video app editor, then you see that they're on the right track on doing that. Now, a lot of people go to Pinterest for this, for the sake of, hey, I want to click through to a website. So they're starting to allow tagging of products for you to learn about the products that a lot of these content creators are going to be showing. And so that's also going to help people, engage more with the video content, and naturally video content is more engaging. So this seems to be a good avenue to go forward. They're reducing it also to be a short form, and as they say here, it's a visual stories with videos, voiceover, and image and text overlay capabilities. So this looks like it's going forward, but how long is it going to take for them to actually kind of get into this market, this content creator market, and get enough creators to be on the platform, as opposed to being on TikTok, Instagram, YouTube, and elsewhere? That's something that we have to wait and see how long this turnaround is going to be. But let's not mince words. This is a company that seems to have peaked. So let's look at some other things that they're doing as well. They're expanding their skin tone range feature to more countries, and this is an AR-driven augmented reality where people can alter their search based on the skin tone of their interested search. So if you're darker skinned or lighter skinned, you can alter that based on this. Other companies are doing this as well. I mean, let's see if I have it here yet. Pinterest launches AR-powered try-on experience for eyeshadow as well. That's a similar kind of idea. But this is also being done by Google. And Google pretty much has the exact same technology that Pinterest has, because they're using a company called ModiFace. ModiFace is basically this augmented reality technology that's being brought by L'Oreal. L'Oreal actually didn't develop this themselves. They bought a company and called ModiFace, but Google is basically licensed the technology from them as the same thing that Pinterest did. So Pinterest, led the way. They did it first, and then Google said, okay, we'll just do it ourselves too. So it's not unique. It's not going to be a competitive differentiation for them. The augmented reality, makeup, clothing, and stuff like that they're trying for, that allows users to be tried on and users to then buy lipstick or clothing or whatever. A little bit concerning. If you don't have a differentiating factor in terms of technology, then you need to have something else. And at this point, it's the only differentiation that they have is their core product, which is visual search, and that's not interesting enough to users, as we've seen with the dropping user metrics. That said, they keep bringing out new things, and that's I think the future for them. So the new thing that they have along with the idea pins is the creator code, which is their rules and guidelines as to how you're supposed to present things and what you're allowed and not allowed to do. Obviously, you're not allowed to harm others. Please be inclusive. Don't exclude certain groups, and be aware of triggers. And the same thing, that common normal thing that if you're working at any company or if you're on social media, then you're not supposed to do stupid and crazy or harmful things or drive people to do that. So that's good. But as part of that, they've given the moderation tools for creators to including comment removal, keyword filtering. They can feature up to 3 positive comments. They have a new spam prevention signal, which is a machine learning algorithm, and positivity reminders for pinners to adhere to community guidelines. I think this is wonderful. It's going to continue to cement themselves as a really positive, brand-conscious, consumer positive platform. Now, they've also launched a creative fund. I'm not very positive on this, to be honest. I believe when I've looked into this, it's like $30,000 or something. It's peanuts compared to like TikTok and YouTube's, and they have like $1 million creative funds, and YouTube has like over $100 million that they're going to be giving out over the next several years. It's just they really have to beef up, and that's the discussion point. When I got onto the earnings call, listened to it, they basically said, hey, we're going to be investing really heavily on this. And one of the places that we're investing in it is the fact that we're going to give up advertising revenue by placing these idea pins right up there where the premium advertising pins are. So they're going to lose revenues. And so when we go back to the situation here where they're losing users as well as now they're going to start losing revenues, we may have this like crazy moment where they're losing users and revenues at the most extreme, and people might panic in stock in the next 1 or 2, 3 quarters. So don't feel, don't be surprised, that might happen, and we could see this really drop to where it could be as low as where it was a year ago, around. We see this supporting line potentially that I drew, that I think it might come down to. But you see, it could drop to us anywhere right about here or here. This is part of a longer term trend. I kind of cut in between. Let me show you that trend over 2 years, where we see really from here touching this here and going up through here, and it touches the bottom of this trough. So I think we may find this trend be held. It's not a clear trend. So other people looking for this trend may not see it, but I see this as it seems to be the pattern of growth. So I'm looking at around there, and just to get zoomed in, on this a little bit better. In the 90 days, no, this is still not a good one. We'll want to do 180 days right here. We could see that it kind of hit a bottom right about here. And that was around $57. I bought a little bit, but what we could go to is, like I said, over the next year, over the next half a year or 3 quarters, we could drop as far as somewhere around here. Say if it drops, maybe 1 quarter and it drops maybe somewhere here. It could sell a little bit, oversell and go down here, but I would not be surprised for it to come down somewhere around this region here, $44. So something to look forward to if you're interested, if you're bullish on Pinterest transition from this, just web e-commerce visual discovery tool to a actual social media platform. The jury's out. I think if you look at the platform, it's problematic for that. So much of it is people user habits of just pinning things and sharing pins and stuff like that. But if they're able to beef up that content creator fund and get more creators on board, then this could maybe works. But they're going to have some frustrations. They're going to have frustrations of people not expecting to see creators and then seeing them, and then maybe people wanting to see creators but not being able to differentiate the creators from the other pins. We're going to see how this plays out. I'm bullish on it. I think it's I'm definitely buying heavier on 40 and then 33 if it gets down that low. But I wanted to cite something else here that is of interest. Pinterest has some serious problems with its monetization. If you look at how social media is, and that's I think part of the reason why it wants to move to social media, social media is a much more quicker monetization. You start days away from the purchase decision, where the purchase decision is like at this peak right here, and on the day, maybe 1 or 2 days before you made your purchase. Search, Google search, Bing, but especially obviously Google search, it might be a few weeks out. But Pinterest, you start months out. You're not even sure what you want. You're just kind of browsing, and trying to see interesting things. So that's something that they're really trying to figure out on how to do. And so I think that's part of the reason also why they want to move to social, where they get just a lot more, inventory shipped out by their clients, and they'll increasingly increase the value of their ads and make more money. And that's a great thing. I like that, but it's not bad. Look, revenue is 613 million at the last 3 months ended this quarter, right? Compared to last year of 272 million. That's 125% change. So that's not bad. Instead of a 12% loss on adjusted EBITDA, it's a 30% gain. I mean, come on. Nobody could be upset with that. It's just a concern about the future. And you see the mix here. The revenue is strongly in the U.S. still. International has to grow, and that's something that they're going to have to work on. But not problematic. Just really the guidance was problematic, and I've kind of explained that, so I don't need to reiterate it any further. But we shall wait and see. My recommendation is really, this is a company that's in transition, and you might want to wait for it to bleed out a little bit before you buy in, if you wanted to buy in. I'm invested, and I'm going to buy more once it drops further down and reduce my average cost. So I'm looking at what are other people thinking. So I found this article with different analyst opinions on it after the second quarter of this year, 2021, report on Pinterest. We had Credit Suisse analyst Stephen Zhu. Excuse me, Stephen, if I mispronounced your name. But Stephen said he basically went neutral on it and lowered the price target from $94 to $82, still higher than where it's currently traded at. So that's good. KeyBank analyst Justin Patterson has an overweight rating, but lowered the price target to $75, so even lower. And the next price target by Mark Zugotowicz has a neutral rating and price target $65. So we see lowering, another one $77 and another one $73. We really do have a lot of people having concerns over the U.S. monthly active user growth. They see it's peaked given the miss on the figure in the quarter, and other people saying the same thing. And having the same concern as me. I think you could probably see this go down at some point in the next few quarters. If they don't reverse this dropping, you could really see it go down to 44, 33 in the most extreme. Especially in the coming month, there might be some real strong volatility. We'll see how that plays out. But overall, average price targets are around $70, kind of 70, yeah, 74, 75. Yeah, I would say $75 is the average target, seemingly. Hey, so thank you for sticking around the full 20 so minutes of this review, and I hope this helped. If you found this helpful, or if you want to provide me other feedback, maybe getting the video shorter, or whatever you thought, or the next video you want me to make on the company you're interested in, just let me know in the comments below. Yeah, smash the like button if you can, and subscribe if this is helpful. Thank you so much, guys, and have a great day.